The broadcast is now starting. All attendees are in listen-only mode.
You can go.
Hello, I'm Joyce Barrett, and I'd like to welcome everyone to today's webinar. Webinars are brought to you as a membership benefit of Heritage Ohio. Heritage Ohio's mission is to help people to save the places that matter, build community, live better. Today we have a presentation on funding opportunities with the Finance Fund. We will be taking questions at the end of the presentation. If you have a question, please type it into the question box at any time. Most issues with the webinar software will be solved if you close the program and restart with the link that was sent to you. Our presenter today is Geggie. Ann is the Vice President of Lending at Finance Fund, a statewide nonprofit community development entity that moves public and private capital into low-income communities to improve the quality of life for people. With more than 14 years of progressive experience in community development, Ann has familiarity with all facets of the lending process for specialized loan programs, particularly in the healthcare and education sectors, as well as other community facilities in low-income communities. With that, I will hand the presentation over to Ann.
Thanks, Joyce. Hello, everybody. So I'm here to talk about the funding opportunities available through the Finance Fund. And so I will talk a little bit about who we are and then both the grants and the types of financing that we provide. So we are a statewide nonprofit, and we've been around for several decades now with the mission of connecting low and moderate income communities with public and private sources of capital. And so we have grants for community-based nonprofits, and we also support economic development projects in high distressed areas through the federal New Markets Tax Credit Program as well as the Ohio New Markets Tax Credit Program. And then another part of Finance Fund is the Finance Fund Capital Corporation, and we have a certification through the Treasury Department as a community development financial institution. And that allows us to provide flexible loans to community-based nonprofit organizations and for-profit businesses. We do loans to small businesses. We do loans for commercial and industrial properties, retail and office space, as well as working with nonprofits on community facilities and affordable housing. And we look in most of our work to create permanent jobs. To date, we have invested more than $336 million in housing, economic, and community facility projects, leveraging more than $1.37 billion in the work that we've done across the state. And I often describe the work that we do, or our mission is to bring capital to the places that it isn't. So the places that other financial institutions, just the projects that they can't figure out how to get done, that's what we do. And I also try to make the grant and loan process as simple as we can. It can feel complex, but the work that we do is important, and I believe that we can change systems, create jobs, and really address community needs and improve the quality of life for people in our communities. And that's kind of what gets me up every day. I'll jump right into the grant programs that we have available. I know a lot of people are interested in those grants. And so the general eligibility requirement for these grants are that we make them to community-based nonprofit organizations that have a development focus. And so that development focus is in a defined geography, and that it is also focused on low and moderate income places. We also look to have those nonprofit organizations have a board membership that a third of those directors represent those low and moderate income places. And that means that they could have jobs where that's the work that they do, or they could be residents who live in those places. We look to the financial capacity of the organization to complete the project the grant is for, and just generally to be able to continue to operate. Our grants also have match requirements, and we usually require that the funds are used within 12 months. And that is something that we look for and talk about during the application process. I know sometimes projects can be slow to move in general. We have some requirements that the money gets used, so we need to ask that our applicants are able to do that as well. So the first grant I'll talk about specifically is a pre-development grant. And this is a grant up to $30,000. And the idea is that it is to help determine the feasibility primarily of affordable housing projects or projects that are mixed use, so with commercial and then a housing component as well. And these funds can be used for appraisals, environmental work, business plans, those market studies, really, and even then some of the additional professional work that needs to get done to determine the feasibility or to kind of get to a point where you can ask for the final financing. So, the architectural or engineering drawings. Some of the money can be used for administrative costs, but most of it should be going toward these uses. And this next slide is kind of a general sources and uses that I see for most of the grants that we did, or many of the grants that we did last year. So a little bit of cash, and so I used a CDC. A lot of our grant applicants are community development corporations, and they might even be called that. But our applicants don't have to be. There is no formal definition of a CDC, so that the eligibility requirements that I just went through, generally describe a CDC, but they can describe other types of organizations. So as I look at how organizations put together money for pre-development costs, so a little bit of cash from your own pocket, maybe a small grant from a local foundation, and then perhaps a grant from the finance fund, and using it for a mix of those architecture and engineering costs, the environmental appraisal, maybe some work from a consultant to finalize the feasibility or to put together the financing package. One project that we provided a grant to in the last few years was in Greene County, and it was to prepare for permanent funding for 8 homes. 2 of them were home ownership, and then 6 rentals, including seniors and people with special needs. The for sale housing was meant to be for households who are less than 80% AMI, and the applicant already had site control for those homes. They were looking to finish architectural plans for those new homes, to finish the engineering drawings, and needed some funds for the real estate option and then to complete the appraisal. And there were kind of at least preliminary commitments for permanent funding from the Federal Home Loan Bank, OFA, some foundation, and then the Ohio Department of Disabilities. I don't expect that applicants who are trying for pre-development grants have the final financing in place, of course, because these funds are meant to figure out if projects can work. But we will look to see that you have a sense of what financing you can get, what type of permanent or construction financing you can get for these projects, to make sure that the project, that you have a place to go with this project. or you can tell us that that's exactly what that feasibility work is going to be doing, is to help you figure out those types of funding. But I do want to know that you're thinking about that. We also have a second grant available that we call an economic development grant. It is up to $100,000, and we do require that that $100,000 is no more than about a third of the total project cost. And I would describe this grant as filling the gap. It is that last bit of money that a project needs to get to the finish line, to start construction, and get completed. So there may be instances where a project is having difficulty either attracting or able to support that little bit of additional debt. You may have lenders who are limited because of appraisal issues or other reasons. But the idea is that you've got a project that is basically ready to go and just needs help. This is sort of that but-for money. We will be looking to understand, or that to have you show us that these projects are self-sustaining, so that once that construction or acquisition or whatever it is completed, that project, so if it's a small commercial strip or a mixed-use project, that it can pay for whatever debt that project has taken on and won't require significant grant funding going forward. I will say, if this grant is to be used in a construction project, because these funds are, the way these funds are coming to us from the state, if they are used for construction purposes, prevailing wages kicks in. So if you've got a project where you're already doing prevailing wages, no problem. If you're doing a project where that's not the case, we'll try to work with you to use these funds for fixed assets or professional fees, kind of other things that won't trigger prevailing wages. And we are almost always able to do that for projects that haven't otherwise fallen under that requirement. And I glossed over this, but I'll reinforce the last thing on this slide, that the current focus for this grant is commercial revitalization that creates jobs. So we do, as I've mentioned before, we do have a focus on job creation. And so with the Predevelopment grant focused primarily on affordable housing projects, we switch the focus of this grant a little bit to commercial projects that have some sort of job creation aspect to them. And so the way that I see these grants being used is that there is a primary loan, other grants from a city or other places, and then the Finance Fund Economic Development Grant kind of coming in last. And so there's all of those acquisition, construction, and soft costs. So that's kind of all mixed together. A recent use of the Economic Development Grant was a project in Summit County. It's a mixed-use, multi-story project. So I think it's 3 stories, and so the second and third floor is being financed with LIHTC, and they are 1- and 2-bedroom apartments for seniors. The first floor will be retail, with the idea that the tenants in that retail space may be 1 or 2 large health-related tenants, a clinic from a local hospital, something like that, and or maybe multiple smaller service-oriented tenants, service-oriented business for those tenants. One possibility is actually a barber shop that may either move or expand into a small spot in that. And so the Economic Development Grant is going toward that first floor retail space to help make sure that project is self-sustaining, and that the rents paid in that neighborhood, in that place, are affordable to those particular tenants. And there is local financing in place. And this is a project where the finance fund may also provide debt into that retail space. That's of course, in no way a requirement for these economic development grants, but something that I wanted to point out is a possibility. And as I talk a little bit about the breadth of lending that finance fund can do, I hope it helps people think about the ways that finance fund can partner with your organization. So we do grants annually. We expect to announce kind of the new round for 2018, maybe as soon as the end of this month. We will announce when the application period will be, so we'll give some lead time to when we'll start accepting applications, and then we will have a window of when we accept those applications, and then we'll close that window and go through a review process. In years past, if folks have worked with the finance fund, these grants have been around almost since our beginning. We've done things a little bit more first come, first serve. We switched that up in 2017, and we'll continue with this application period and then a review of all of the applications that we get in. I think that that allows us to pick projects, the best projects to the best of our ability. These are really, of course, grant funds are scarce everywhere, and this was a competitive project last year, and I expect that to continue. But it at least allows us to look at all of the projects together. We will have updates to our application and to the process with a focus on kind of streamlining that application process. I'm hoping to do things like, if you have applied in the last year or two, or you've gotten a grant in the last year or two, that we cut down on some of the things that you provide to us unless they've changed. And we will, in the application announcements, we will talk about the focus of those particular grants. So again, the affordable housing and that kind of commercial real estate. And I think I've stressed already today the importance to me of feasibility for these projects, and that organizations are thinking about those. We to the best we can, look at the impact of a project on the locality, and we'll continue to ask you in the application process to identify that impact for us. We may not be as familiar with your community as you are, so you're going to have to tell us the things that we don't know. And then as a statewide funder, we will also be looking at geography kind of annually, but then over time as well. We want to make sure that these grant funds are dispersed across the state. That's important to the folks at the state who provide us these funds, and it's important to us too, to try and get money, especially to places that may not have gotten it before. And I've got a little detail here about the competitiveness. So in 2017, for the economic development grants, we got 12 good applications, and we were able to fund 4. So just to know that this isn't money that you can necessarily count on, which is I wish I had more. What I do have more of on the next slide is loan funds. And so I'm going to talk a little bit now about the loan funds that are available through Finance Fund, the types of lending we do, the types of projects that we look for, and again, hope that it spurs some ideas in all of you. So as I mentioned, we have a loan fund for small businesses. For the past couple years, we've had a program focused specifically on healthy food and really grocery stores in food deserts, so places that people don't have access to healthy food. And we also do community facilities projects and affordable housing. And we will look at projects from $100,000 to $2 million. I think one of the important things that we bring to the loan structures that we do is we almost always provide a fixed interest rate. And I think for nonprofit projects that can be really important so that you know your loan payment isn't going to change. And we also try to have the amortization be as long as we can. It may have a shorter term, so we would call that a balloon loan, meaning that at the end of 5 or 10 years, that loan, a big chunk of that loan will come due, but it was amortized over a longer period, so your loan payments were smaller. The small business lending that we do, and again, this is across the state of Ohio, anywhere. So these are for-profit businesses, usually established businesses that are unable to obtain a loan through a bank. We kind of do the small business lending that the banks won't do. It may be because of the size, it may be because of the business that's being financed, and it may be because the credit score of the business owner isn't that great according to the bank, or maybe they had a recent bankruptcy, maybe what they're able to put up as collateral isn't what the bank would like it to be. So we're able to be a lot more flexible on all of those things. The loans that we do are usually, I have up to $1 million. We'll definitely look at small business loans that big. Generally, after loans that are kind of above $250,000, they probably belong somewhere else. But I have lots of people that I can refer you to if you have a business that's looking for a larger loan and they don't know where to go. And we do a little bit of everything. We do kind of acquisition and renovations, including unleased properties, purchases of machinery or equipment, help with inventory, even we can do debt refinancing. And we've done machine shops to architects to start up restaurants. So name a business, and we've probably looked at it. And these are small business loans. We generally require a personal guarantee. That shouldn't be a surprise to most of those businesses. One of the ways we're able to do this small business lending is that there's a program available through the Federal Small Business Agency that allows us to get a guarantee on these loans. There are a couple specific rules that we have to follow in order to use this program, but I would say it's really our job to figure out if we're following these rules and if a loan fits into that Community Advantage program. It doesn't have to. I kind of think of that stuff as sort of behind the curtain. We'll figure it out, and then we'll be transparent about the type of loan that we're able to provide to a small business. One loan that we did recently here in Columbus was for a wholesale bakery that does gluten-free stuff. They had limited retail hours at the site, but had the opportunity to expand into some retail space literally next door to their bakery. And so we were able to provide them financing for equipment and then just that sort of startup operating money that you need as you do new things. And so that was a nice small business expansion that we were able to do here in Columbus. The Healthy Food for Ohio program is, I think of it as also small business lending. So this is generally small grocery store operators who are going into underserved communities. It's not the Krogers and the Giant Eagles or even the Save-A-Lots. It's independent groceries who are going into places where either a grocery store has never been, or one of those larger chains decided that they didn't want to be in that neighborhood anymore. But these smaller retailers, with help with flexible financing from us, have been able to make a go at it. And so the money can be used for all sorts of things: land acquisition, construction, inventory, and all the things a grocery store needs to get started. We have a few small dollar grants available. That those grants we get them through the state budget process. So that was a tough process, tough budget last year, and we got a very small dollar amount. We're glad for it. But they're in the like $10,000 range. So we're looking to use those kind of as a pre-development dollars for to help communities figure out if they need or kind of if a grocery store would work in the place that they'd like to put it. So if your community is thinking about that, please feel free to reach out to me, and we can talk about it more specifically. And so that's the Healthy Food for Ohio program. The last couple loan funds that we have are focused with nonprofit organizations. So community facilities could be anything from a non-public school to a health clinic, maybe a YMCA, doing something where that nonprofit is going to own the real estate and operate and provide services for the community out of that real estate. And so we'll look at projects up to about $2 million. If the project is larger than that, which isn't unusual, we certainly have partners that we can call upon to help with those larger projects. There's some national park organizations who are kind of happy to participate in local projects, or just other local partners. Or if you're working with a local bank and they're having trouble with their kind of loan to value or some other financial ratio, we are again more than happy to partner with that local bank to get a project completed. We do prefer to be in a first position on that real estate, but there's a little bit of room for negotiation there. We tend to provide fixed rates of 5 to 10 years. And again, I'll say that my background is working with nonprofits that do social services, so I'm very comfortable in understanding the income streams from these nonprofits. I know sometimes local financial institutions can be, it can just be harder for them to get to that comfort level. The Finance Fund is also starting to do some affordable housing lending. So for multifamily projects, we have a particular interest in housing with services. So for people with disabilities or other special needs populations, we will consider kind of gap financing or acquisition financing. We would consider kind of a scattered site, single family model, maybe for rental purposes. And we can be a little flexible on either the collateral position or the loan to value. There are several great affordable housing lenders in the state, particularly doing LIHTC projects, and then some kind of local and regional folks. we're just in the last few months getting the lay of the land and understanding kind of where current financing is, but then also where it isn't. And I think with some of the changes in the marketplace, and maybe even on the tax credit side, there will be some projects that are feasible, but need maybe a different type of financing. And so those are projects that we'd be happy to hear about and talk with people about. Again, it's that the projects that are having, if you've got a good project, but you're having trouble finding the right financing for it, that is what we are here for. Yeah. And I hope what you heard from me on the grant and loan side was we'll kind of look at anything, small businesses, nonprofits, housing, commercial real estate. We are, I'm happy to talk to you about your project. Our job is to get capital out to all the places in Ohio that need it. And so I'm really happy to be kind of connecting with all of you today.
Okay, this is question time now. The first question is, how long preferred for established financial history?
So on the grant side for an eligible organization, we would want to see something like a minimum of 2 years of being in operation. If for some reason the applicant is a new entity, but the people doing the work have a long history in the field, that I think is something that we could get, that we could work around. But the idea is that it's an established business.
Next question. What are the typical interest rates on healthy food and community facilities?
That is a great question. And it would depend a little bit on the type of project and the risk. Our rates on those deals are probably in the 6 to 7% range. And that's a big range, I understand. And again, so it depends on a little bit of where we might be able to find capital to contribute to a project.
Another question that came in, home-based businesses that want to expand into a storefront?
We would certainly consider something like that. What we would want to see is some historical financial records of that home-based business, and then to understand how big of a jump it will be to move into that storefront, what kind of demand there is for that particular business. And we know that some of that is projections, and that's okay. We'll just want to walk through those to make sure that we feel comfortable with what that kind of projected demand might look like.
Okay. Can nonprofits, we have a lot of questions coming in. So can nonprofits apply for and be granted both the pre-development and the economic development grant if the project qualifies?
We would typically not provide both grants to a project at the same time. And that would be because the grants are meant to assist projects at different points in the life cycle, so that the pre-development grant is very early and it is before much of that feasibility work has been done, and then the economic development grant is sort of at the very end of a project when it's ready to start construction. In addition, with a large number of applicants for both grant pools, we will look to try to spread these funds out amongst projects to the best of our ability.
But do you lend in sequence then?
Like a pre-development grant one year and an economic development grant next year? Maybe, but that can feel like putting a lot of money into one project when we have demand from all over the state.
Okay. Can any of the funds be used to help clean up contaminated sites if there are other sources already helping?
Sure. And it sort of depends on, I suppose, what is meant to be done after the contamination is cleaned up. So if there's a feasible project that you have, that might be a good place for an economic development grant application, or if the final project could support debt, we might be able to put a loan into that type of project as well.
I have another question. Do you make house calls? Do you come to the community?
I'm certainly happy to. I try to get out and about as much as possible. Sometimes a phone call is a good first introduction to figure out what we might want to talk about, and what you would want me to do when I come visit. But I actually, that's part of what I'm doing.
There's another question about grant opportunities as opposed to loans, and I think maybe you weren't there for the whole thing. The two grants were the Predevelopment and the Economic Development grants, and the rest are loans.
That's right. And so the Predevelopment and Economic Development, those are grants. That is money with strings, but not to be paid back.
And we will be sending this presentation out to all of you who've participated so that you can go over those slides in a little bit more detail to understand which ones are grants and which ones are loans. The next question is, we have a low inventory of quality homes in the 80 to 99,000 price range. Our historic area adjacent to our downtown has a good stock of homes that could be updated, restored, and sold in those price ranges. Would any of these grants support a project like that?
So since that would be a housing-focused project, if you have needs that are pre-development, so soft cost, if there's a need to spend some time both inside or maybe with a consultant outside of your organization putting together how if you could kind of package those homes together, or if you need an architect or a contractor to come in and give some estimates on how much renovation might need to be done, those sorts of things would be applicable for a pre-development grant. And happy to have that be a partnership with local government organizations and a land bank. But I will emphasize that our grants need to go to a nonprofit, community development oriented organization.
There's a question about a feasibility project such as a grocery store.
Mm-hmm. So we have a small pot of grant funds to be used for exactly that. So the person who asked that question, I think you and I can have a conversation offline. I would be happy to.
Do businesses in historic districts move up on the decision scale at all?
Not currently. That is not that's not something for us that checks an additional box. I think we're looking at things like affordability, impact, geography, and sustainability.
How do we get lists on the updates on granting cycles?
I am happy to add you. So we'll do an email blast when we announce, and so I'm happy to add people to that list, and I can certainly send it to Heritage Ohio.
Yes, at Heritage Ohio, we would include it in one of our Monday e-blasts, but probably what we'll do is we'll share these emails with all of you with the finance fund so that they can add you to their list so that you'll automatically get those updates. Mm-hmm. Does the NPO have to be a CDC?
So not really. I've had a couple conversations with Nate Kaufman at the Ohio CDC Association, and there isn't exactly a set definition even of what a CDC is. I mean, there's I think a general concept, and that's what we're trying to get to in in our eligibility requirements, which is a nonprofit that has is focused on a geography of low and moderate income places and has a development focus. I mean, that's probably a general way to describe a CDC, but I know that there are other organizations that fit under that umbrella, and we are happy to embrace them as applicants.
Do you want to share your contact number?
Sure. My direct number is 614 area code 568-5049. And I think actually the very last slide in my presentation has my phone number, my email address, as well as just financefund.org, which our website is in the midst of being updated, but we do have lots of information on it.
Oh, I went too far. I'm sorry.
That's okay.
A few more questions.
The very end. Yeah, there's me.
Another question, for community projects, would, for instance, historic theaters, public restrooms, is there anything you can think of that would not qualify?
No, as long as the applicant is a private entity, whether for-profit or nonprofit, so not a government entity, and that we can understand that the debt will get paid back.
Okay. I wondered if you would talk just for a minute about affordable and market rate housing. Can the project have a mix of market rate and affordable housing, and how do you look at that?
For our pre-development grants, we do have a focus on affordable housing, and that is that's partly because of our economic development focus, but also because of how we're getting these funds and kind of our agreement with the state of how those grant funds will be used. For the economic development grants and then for our lending, I think there are some places where we can be flexible. And I know I've had conversations with, or kind of detailed conversations with one specific project in a smaller community, a mixed-use project with retail on the first floor and housing on the second, third floor, and that housing is market rate. And I understand that to be part of the economic development of that downtown. And so we would be happy to be a part of a project like that. Again, not for pre-development, but economic development grants or even our lending. And sometimes I hesitate to have all those buckets of our lending because I don't want people to think, like, just call. Like, even if there's very little that I won't think about. Certainly there are, but there's very, very, very few projects. If it has an economic development focus, if you are trying to redevelop a place, I'm more than happy to have a conversation about that.
Another question, I wonder if you would talk about for a second. You mentioned that the applicant organization is supposed to have the financial capacity to complete the project. Mm-hmm. That doesn't mean that the organization has to have all the funding on hand.
Right. And yes, thank you for that clarification. And especially the pre-development grants, our grants this is to help you figure out if this project is going to work. But I do want applicants to be thinking about where the financing could come from, and that this is a feasible project. Like, from a kind of common sense perspective, it's something that's gonna work. And yeah, that doesn't, it doesn't mean that you have to have the money in your pocket to complete the project, but that you have a concept of that it will work.
And that's true of the economic development grants as well as the pre-development grants.
The economic development grants, we're looking for folks to have more of those funds committed or nearly committed, and that we're the last piece in the puzzle. You know, again, we want those funds to go out the door. So if it's an issue of kind of somebody has to commit first, okay, we'll commit first, and as long as you know somebody else will come in the door right behind us.
Okay, do we have any other questions? We haven't had any come in for a moment or two. We did that. Okay. Well, Anne's given you her contact information. It's here on the slide that you're seeing, and we'll also be sending this out to you tomorrow, so you'll have that. We'll get all of you lined up on the Finance Fund e-blast list. Thank you all for joining. And please watch the Heritage Ohio for upcoming events and future webinars. Thank you very much.